In 2008, the global financial system fell apart. Banks failed, markets crashed, and trust in the system disappeared almost overnight. Less than 6 months later, Bitcoin appeared online. To really understand Bitcoin, we've broken the story into 3 parts: why it was created, how it works, and how it's evolved from 2009 to 2026. This is part 1, and it starts with why Bitcoin exists. To get there, we need to go back to 2008. At the time, the world was in the middle of a massive financial crisis. Some of the biggest banks on the planet collapsed almost overnight. Others were just barely hanging on. These weren't small players either. They were institutions that people trusted with their life savings. To stop the entire system from imploding, governments stepped in and printed billions to bail those banks out, using taxpayer money. For the banks, that worked out pretty well. For everyone else, not so much. People lost jobs, homes were repossessed, savings took a hit. And here's what really upset people. The same institutions that caused the mess in the first place were now rescued, while ordinary people were told to tighten their belts and move on. As painful as that period was, it exposed something very important. A lot of the financial system runs on trust. Trust in banks, trust in governments, and trust that the people in charge will act responsibly. In 2008, that trust took a knock. Huge sums of money could be printed out of thin air. The institutions in charge prioritized profit over being responsible. And if you weren't close to the system, you really didn't have a say. Bitcoin was a response to that. An anonymous person or group of people named Satoshi Nakamoto saw the weakness in the traditional financial system, and they proposed something different. They released a short document called a white paper outlining a new kind of money. A system that didn't rely on central authorities. A system that didn't depend on trust in banks or governments. Instead, it relied on math, cryptography, and code. At its core, Bitcoin is built around a few key qualities. First, supply. There will only ever be 21 million Bitcoin. Central banks can't just decide to print more of them. Second, no central control. Bitcoin isn't run by a bank, a government, or a company. It's maintained by a global network and not a single decision maker. Third, it's open and permissionless. Anyone can use Bitcoin. You don't need approval and you don't need a minimum balance to participate. Fourth, transparent rules. The rules are public and the same for everyone. Transactions are visible and changes require the majority of the network's approval, not just a select few behind closed doors making all the decisions. Fifth, user ownership. With Bitcoin, you can hold and move value yourself. No intermediary needs to act on your behalf. And finally, global by design. Bitcoin works the same way anywhere in the world, without relying on borders, business hours, or local banking systems. Those ideas might sound simple, but together they represent a very different way of thinking about money. Now, that doesn't mean that Bitcoin is perfect, and it doesn't mean that it magically fixes everything. But it does explain why it exists, and why more than 15 years later, it's still very much part of the conversation. So that's the why. In part 2, we're going to look at the how Bitcoin actually works. And don't worry, we're going to make it simple so that you can understand. Because once you understand how it works, the rest starts to click. If you guys got value from this video, please subscribe to the channel for more content like this. We'll see you in the next one.